The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another gorgeous day here at the headquarters of Technical Trading and Investing. It is TFNN.com. And it kind of sounds a little different in here. Is that air conditioning noise? Go ahead and turn that off. I can hear it fairly loud. So anyway, we've got the air conditioning rolling in here. I know most people are out there taking maybe a few. Everybody's got to get into the picture, don't they? So anyway, no goofy hat for Steve today, though. But anyway, as we get back to the market, up a little bit today, extremely light volume. And what are we out here at 1555.34 on the last tick with 1.8 billion shares. Very interesting. Maybe this mic is a lot more sensitive than it was before. But I don't know. Just maybe it gains up a little higher today. And what we see is that 1.8 billion shares. Boy, I was looking at it at 10 o'clock, and it was the lowest volume in the last 6 months on a regular day, like not before Christmas or something. I'm looking at it all day long. The volume has just been very, very light. Some people might think it's on the Cyprus deal. I think the Cyprus thing is a distraction. I think we're up here at very high levels, and they're trying to hold this thing up while they get a bunch of stinky IPOs out the door today. I think there was one decent one. There were four, I think, others in the last 2 days that are significantly off their opening prices. And I think I probably talked about that on Monday or Tuesday. These are not the choices. This is the kind of stuff that they actually push out at the end of a move in a marketplace. So I'm kind of thinking about that right now. Anyway, it is a gorgeous day at the headquarters for Technical Trading and Investing on March 22nd. I am your lovable and squeezably soft host, David White. And we meet here every 2 to 3 Eastern Time, 2 to 3 p.m. Eastern Time. Maybe that's what I need. It doesn't sound right if you don't put the p.m. in there. And we discuss stocks. So we are and continue to look at this market as very range-bound but very light. And we're going to get into some stocks that have been moving over the last few days. Now, we've got kind of a problem, and that is very, very light volume. One of the things we're looking at today is Apple. It's up 8.5 points, 461.35 on the last tick I have here, and 9.3 million shares, which is not bad, but certainly not the kind of volume that signals that Apple has done. If you look at the options are bets that it will not go above 470. And it will be someone. We've got an early caller here today. It's Ken, I suspect, from Altamont Springs, Florida. How you doing today, Ken?
I'm doing okay, David. How are you doing today?
Fantastic. What do you want to look at?
Hey, I got a quick question. On Diana Shipping, the stock symbol is DSX. That's David Sam X-Ray.
Uh-huh.
Today it has had a huge expansion in volume. And what I want to know from you, when you have a stock that's moving up, of course, on stronger volume, which was recommended in Tom O'Brien's book, those are the ones you want to look at. At what point do you start taking your some of your position off? I got in back at $9 a share.
I would be taking my money right here. You came down on very strong volume, I'll put it that way, of about 1.5 million shares on, what is this, June 22nd of 2011, and you're just back into that supply line right now. So okay. I think if you wanted to buy it, you're basically, I know you've got a lot of volume here today, but it did not hold that high. This kind of candle so far today today's the 22nd, right? Keep on thinking it's the 23rd. This kind of candle shows you exactly what you got into, which is you went right into that supply line. And are you watching on Tiger TV by chance?
Yes, I am.
Okay, so you see that bar, which is that gap that started this huge move down. You came back into it and couldn't quite touch it on February 14th of 2012. You came back down and made a lower low, and here's the thing you want to look at in this stock. That is that high volume low that's still untested out here. And that is the July 24th low of 2012, where you had 1.2 million shares and it's never been retested. So when I look at stocks, the first thing I do on these is say, okay, is this stock, has it got the potential to go to 20 bucks or 30 bucks? The answer with a high volume low is it may go back and retest the last major high, which it did today.
Okay.
But it's, your odds are that within, most of the time within 6 to 9 months, you go back and retest that previous low. So that would worry me. But what you had today was a major short squeeze, ran everybody out that had been short this for a while. Because when you go back and look at this longer term, well, we got 2 years up here, but what's like 4 years or something on this? Let's get that. When you look at the 4-year thing, this was an $19 stock back in November 18th of 2009, and June of 1 of 2009. And if you've been listening to my show also, you know that stocks under 10 bucks have a organic problem, and that is that most funds cannot buy them. So the question is, how much farther up do you have to get? And normally what I would rather see is in a stock like this that it gets to 15 bucks and it pulls back to 10, and then you start to see funds buying, right? And the problem here is that anybody that's buying it is probably a hedge fund, not a big fund like CalPERS, and it's probably not, or it's probably retail investors, which also tend to be rather skittish. But what you had was a short-term blow off top here today. It went through that previous February 14th high. It did it with volume, and it could not hold that high. So let's see what else. You got 2.9 million shares. Normally, that's just everybody getting out of the way and short covering. If it would have held that high, then you would have had a legitimate breakout. But I just don't. Let me see if I can get a current quote on this thing. Just make sure that I'm not looking at the wrong thing. DSX. So it's at $10.10. It's got to close above $10.19 today. And if it's
okay.
It's 10.10. So you could almost say that. I just, when you look at a market today that's got, what do we got here? 1.9 billion shares. I'm very, very skittish that, you'll probably know Monday, but I'd much rather start seeing at these, if you're buying at 9 bucks, I'd certainly take my money at 10, and I'd like to see this thing break out with volume and then pull back down to that $10 level and then start seeing some kind of interest in funds or something, because if you get this right and the funds come back into this thing, it could be a rocket. But I would have much rather had it, been buying this much lower. But, take your 10% profit. I don't have any problem with that. I just, you're basically into the point now where this thing's got to go up to, and stay for like 3 months above 10 bucks to get the funds where they're, willing to dip their toe back into it. And then you might see that 18 bucks again. I don't. What's your belief when you took the trade? What were you thinking?
I was thinking it can at least go back to some of those, like the mid-range of where it was trading before. Here, let me bring up another chart here that I was looking at. Let me go back 3 years. I was looking at a weekly chart going back 3 years, and I was thinking maybe it can get back up into that $13 to $14 area.
Yeah, you got that high of November 9th in 2010 at 14.23, which
That's correct.
Which would be pretty much your next target up here. What I dislike is that you did come down on fairly light volume. You do have one high volume low, and that's the one thing that I do stay away from is high volume untested lows. I traded with Tom early on, and also some of the other people that did a lot of price and volume. And the one thing that everybody, agrees on eventually is high volume lows are not lows until they've been tested on lighter volume again. Just seems that out of nowhere the news comes and they go back and eventually test those lows. So that would be, you've got probably a 75% chance of that 589 getting retested in the next 6 months. Now, maybe this one's the 20% that doesn't do it, but that's the one that always scared me, is that just overwhelmingly go back through the charts and find out anywhere from 6 to 9 months of how many of those high volume lows get retested, and it's just enormous. So I've always stayed away from them. Not a bad looking chart, and the volume's up here, but you need to close above 1010 to get your signal that you would want to hold this even 1 day longer. Close below here, and you're probably going to pull back to probably the start of this range of the last couple of days. So what is that? That's $9. I mean, I think you've made a great 2-day profit. So
a lot longer than 2 days. So.
Oh, okay. Well, you've had it for 9 days?
No, actually back on here. 1 second, I got my notes here. I'll tell you when my buy date was. My buy date was 23 January of this year.
Okay. That's not bad. I mean, that chart pattern did show you that there were some people interested in this thing. It wasn't going down, and they were doing a little bit of accumulation. What, did it have news in the last couple of days, earnings or something?
No. Just yesterday they were talking about how increased orders for supplies like grains and things like that. That's what this company ships. It ships raw materials as far as dry bulk.
Yeah, it's a dry bulk shipper, yeah.
Yeah.
How do the rest of them look? DRYS.
Here's one you can take a look at. Look at EGLE, which is Eagle Bulk Shippers.
EGLE.
Edward George Larry Edward.
Okay, I got it. Yeah, it's another one. Yeah, some nice volume in these. Like I said, these all have this. I was talking about some of these a while ago. They all have high volume untested lows out here, though, don't they?
Sure do.
Yeah. So, I mean, I was looking at dries, which everybody was all over forever in the last big run for these things. It doesn't look near as good, does it?
No, and there's one other one, the most popular one everybody's looking at is dry bulk shippers, and that's DRYS.
Yeah, I was showing it here.
Yeah.
That's the one I'm saying doesn't look quite as good that everybody just remembers from the last run, which is kind of like World War II, where everybody fought the World War I instead of understanding that things had changed and fighting World War II. I don't know if anything significantly has changed in this, but it does look interesting. Well, I don't know. The one bad thing is all these untested high volume lows out here. This one's got, dry's got it at 146. Thanks for the phone call.
All right,
I'd be taking my money and waiting for this thing to break out and then pull back to $10 and wait for funds to start buying. You all have a good time. We'll be back in just a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And we come back. I wanted to appreciate Joe D. from the Den. As we're talking about these companies, there is one without a high volume low. It actually tested its low, and that's Nordic American Tankers, NAT. Thanks, Joe D. That is exactly what you're looking for, in that it had a huge snap down August 1st of last year on 6.7 million shares. It's gone in there. It's gone below that. It consolidated out beautifully, and this would have been the chart to buy out here. This is beautiful. We don't have a lot of energy yet, of course, not near the kind of volume we had in some of those other stocks, but again, I suspect that you're probably going to have to get a little higher to blow out some of the shorts in this, but not a bad looking chart out here. In fact, you could be, this thing probably went just long enough to wash out a lot of funds out here, but it's back in that $10 range, and if this thing if you got a decent pullback on it, this would not be a bad looking chart. We're looking at going to look at some others here. You can give me a call too at 877-927-6648. Wanted to look at Dell. Looks like Dell is going to expire its offer to take opposing bids here at the close today. There were a ton of I think it was calls and puts on this bought in the last 2 days for absolute pennies to see whether or not this deal would blow up. Maybe not a bad bet, but it looks like it is not going to pay off. And Icon's just going to get his probably what $14.50, $14.25, whatever the offer on this thing was, maybe a dime or two less. But that offer will expire, and it looks like Mike Odell is going back into being a private company today. I'm going to talk a little bit about it more tonight on the Tom O'Brien Show, where we're going to do the Tech Insider. We're going to bat this around a little bit, but my call in it is they're taking Dell out to have a little chemotherapy, and they don't want to do it in public because it's going to need some decent work done on it, and it's going to be ugly. We'll talk about that tonight. Other stocks in the news: Oracle, ORCL, it has been down very hard. This is another one of these stocks, and normally when you see high volume at highs, you're looking for some kind of breakout. In this case, we'd been talking about it for a little while. It had broken out in these stocks that are not able to hold these highs. You have to be a little bit wary of. In this case, it came out and had a nice 10% haircut. Toot sweet. What we were looking at in this is a lot of issues. We'll be talking about this on the Tech Insider Hour with Tom O'Brien tonight, too, in the 4 o'clock hour. And that is mostly about their Sun workstations. They paid like $7.8 billion for Sun. And for, a lot of people have been giving Oracle a lot of troubles and saying that it was a stupid purchase, but they went around and turned and sold a bunch of the assets off for about $5 billion. So they're into this thing about $2.8 billion. They also got the rights to Java, and it's kind of interesting to see a company like this get a lot of slings and arrows for what I think is actually a fairly decent deal. What has not happened is people are not buying hardware, or I'm going to say corporations are not buying hardware, and that's continued to be a problem. We're going to go to David in Oklahoma. And how are you doing today, David?
I'm doing great. How are you doing?
Pretty good. Where are you in Oklahoma?
Ada. A little southeast Oklahoma City.
Okay, so I'm trying to remember, someone drove me down there for a poker tournament once, and I can't even remember where that was.
Oh, I bet it was a good one.
Oh, it was. I think I had paid $50 to get in and won $500, so I was pretty happy.
I hear that.
So anyway, what do you want to look at today?
I was wanting to know if you knew anything about Unipixel, UNXL.
Well, let's take a look at the chart real quick. Yeah, I remember this one now. This thing just took off like a rocket and has not come back. And what else can you say? What are you thinking about doing with this?
Well, I'm waiting for that big pullback. It looks like it may have started today. You could almost say this was dark cloud cover on the lighter volume out here.
Can you hang on through the break?
Sure.
Okay, we'll be back in just a minute. This one took off and there was no coming back from it. They basically sell engineered film to the display, touchscreen, and flexible electronics market. We talked a little bit about how Apple got in some problems with these kinds of companies in Japan. We'll be back in a minute.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
We're back and we're talking with David in Oklahoma, just outside Oklahoma City, and we're talking about Unipixel. What do you know about this company?
Well, looking at their fundamentals, I see that they have no sales. So what's driving them?
They actually do sell some stuff. I'm trying to, let me see if I can pull it up. But
it shows that they haven't sold anything.
They sell a membrane. Maybe your thing is just not right. Yeah, let me get to
That may be. I was looking under my fundamentals, and it shows that they have zero sales.
Yeah, maybe it's just wrong. Hang on, let me see. SEC filing, major hold of time and sale, headline volatility. I must be blind here today. Balance sheet. Okay, there we go. Hang on a second. Now,
which strikes me as kind of weird. How are they going up?
The reason that they took off is a reason I brought up a little while ago, and that is Apple. was having problems with a Japanese company that makes basically the same materials and most of the displays over there. But this company that makes most of them, I forget the name, it's a non-public company in northern Japan. But they just basically couldn't produce enough of it, and this company has become the second supplier of it. But they do have sales. I'm looking at their balance sheet here, and you know, they've been you know, total assets have all, you know, just barely higher, but they've been, you know, kind of the second banana out here. They're a little bit more expensive. But what happened even just a couple of weeks ago was Samsung green-mailed the Japanese company to confirm that they got all that supply of that material. Basically, these companies make a kind of a membrane that is glued to the surface of the glass that lets everybody know exactly where the fingers are on things like touchscreen phones and all that, right?
Right.
But this company's just a second, and basically the demand has been so huge, this thing, once they started getting a couple of contracts, this thing just took off. And apparently the demand is so high, like I said, that Samsung's green mailing this company to get a couple million worth of displays just so they can make sure and sell their phones. So Apple's actually had to cut down their iPad mini sales forecast by about 2 million units just to do that. And that's when Apple kind of pulled back and ended up having that low back in there, just under that 425 or something. So this whole story is that they make this stuff. It's hard to get. When it's easily available again, which it will be, they'll probably go back, because I think that they're a more expensive supplier than, of course, the Japanese supplier. It's just that they can't make any more.
Okay, so if I see this thing pull back, maybe that last swing there at March 4th?
I'm looking at the, let's see, what is it? Yeah, that's exactly where I was looking at. $20.58 low on March 4th, the 1 million share day there. Yeah, you probably get just an inner, but this thing's been making ABCs up 1, 2. This one's very long and pretty extended. Let me see. Yeah, that would have been an extended ABC. So expect this thing to come back to probably $20 and probably consolidate for a while. It's not just going to come back down there and touch that gap and then it's all going to be over. It may base out there for a few weeks and then get ready to take off. But even in this thing's starting to develop a personality, and it looks like that personality is 4 or 5 days moving sideways with little or no volume. You had it just before it took off. What date's that? On the December 21st. Are you watching on Tiger TV?
Yeah. No, I'm looking at a chart on.
Okay. The December 21st, then you went into like 4 days. Doji, 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 doji. Somebody's right there. There's your bid, right? Then you get into the same thing starting on January, probably 29th out here. 1, 2, 3, 4 days, right? And then you just see there's somebody back in there putting a level in there. You're probably going to come back and see, since this thing has started to develop a personality, that's what I would be looking for back at that $20 level, is a light volume and very tight spreads back in that $20 level, and it continues to come back on light volume and hits that, continue on. But I don't see any shortage of people wanting to buy phones out there with touch-sensitive and tablets with touch-sensitive surfaces. So I think there's going to be the one thing you probably need to watch is that Samsung is using a lot of these right now. Samsung's made their own plant to build this, and I just don't know when that's coming online. So this may be a 3, 6, 9 month story, but you really need to be watching when Samsung no longer needs this and is making all those displays, including the embedded surface at the same time. And then I think you're probably going to find this thing back at $10 one day.
Well, now Samsung could buy them out also, right?
No, you don't build $1.5 billion plant and then go buy another company. Samsung's built this $1.5 billion plant to make flexible displays. If you go on YouTube, do a search for Y-O-U-M, YUM, and I'm not exactly sure what it is, but it is a graphene-based display, or at least that's what it's supposed to be. And the reason that Apple's kind of bounced the last few days was when Samsung came out with their phone. They didn't talk about this display being in it. Basically an unbreakable display that's also flexible. And that's pretty much when, because people thought, hey, if you come out with a phone with an unbreakable display, then why would you buy the iPhone at all? And
Right.
and that once everybody had a collective gasp, that was pretty much it. So they think Apple's probably got another 3-6 months to get their stuff together. In fact, there was a really bizarre patent that I covered in my Tech Insider newsletter today, and it has to do with a kind of a Rube Goldberg way of getting around of breaking displays. But it kind of shows maybe Apple's desperation in this. But when you basically wait for everybody else to build your technologies, you're at the whim of what they do. And I think Apple's them hiring those 3,500 engineers down in Austin, Texas, is going to mean that they're going to be building their own kind of new technologies for this stuff. But it's going to take a while for them to get in gear. But I would just, if the one thing I'd be watching on this is if it starts showing a lot of weakness, then maybe that demand is caught up. And Samsung's actually got that plant in gear. But it was supposed to already be producing stuff, and it hasn't. And I think that's part of the reason we've seen this real big build-up in Unipixel. Okay? So there's a little color to the thing. I like the chart. Just need to make sure that there isn't high volume when it comes back into that just over $20.50 range.
Well, I was looking at another one, if you got time.
Sure.
GEO. It's not a technology stock. They're into security and alarm services, prisons. They're government funded. Still a lot of government funds. They're out of Florida, as a matter of fact.
Geo, nice looking chart. And energy all the way up. So you know that even if today starts the pullback, you got 36.55 on it today. So the question is just when you're going to get a pullback in this thing. You've got kind of a nice gap out here that shows you where you should be buying it, and that's right around that $31 level. The question is if you get a shot at it. You got a hot. Go ahead.
On a monthly, it just completed a 1.272 Gartley.
Over how long?
Oh, let's see. That it did that ABC up from 1/30 of 2009.
Okay, so let's go back 4 years here. So, what are you looking for the Gartley pattern back in here? You're thinking
Well,
well, see, that went deeper than that.
Yeah,
So
I think
go
there
ahead.
was an A point at $10.98 back on February or March of 2009, and the B point would have been up at $26.95 April 2011.
Okay, I'm starting to see what you're looking at. This is a long pattern, though.
Yeah, but it just completed 1.27, so on that monthly.
Yeah, hang on a second here.
An A to B, C to D.
Yeah.
So are we going to reverse? Here's what or is the government money going to keep this one flying?
I'm just trying to see if I can't pull up something here. Yeah, I see what you're talking about in your particular pattern. The one thing is that on using the rules that I've set up for Gartley patterns, you retrace back into the October 16th low. Basically, it depends on how you want to how you actually put together Gartleys. But I can kind of see which Gartley you're talking about, which is just about there. Statistically, it doesn't hold up. Okay, so you're talking about the X point on September 9th, or excuse me, September 19th, 2008. Your A point, or excuse me, that's your X point. Your A point came in on February 23rd, 2009. Your B point's April 11th 2011. Your C point is November 21st of 2011. Yeah, I see what you're looking at. You got high volume here just a few days ago.
Right.
You know, you got a nice gap back out here at 31 bucks. You were in this?
No, I'm not. I'm looking to get into it, though. This is really a nice-looking chart to me.
Yeah. I mean, you've got two levels back out here, and that is that first gap. The more likely gap is right around $27. So you could have a nice pullback in this thing. But you've got a gap at about 28.5. You've got some high volume movers out here, and also at 31 bucks. So those would be the two places to watch. I would probably you see that 8 million share day on 12. What is that? Okay, that's December 7th of 2012. It's got an 8 million share day there. That's probably where this thing is coming back to first. You're going to find it right in there in that $32 level. You've got a little gap that it got back over that later on. So you've got a lot of stuff that says that 31.5 level is where that thing would pull back, which would be the first place to look at buying it. So I think you got a little bit of time. You might get, you could get an ABC back on this, which would bring you back to like 32.5 bucks.
Right.
But both of those, you're just going to need to kind of play it by ear when that comes back in that range and find very light volume. Just those super high volume days like that tend to get tested again. And I'm thinking when I look at that one stands out. You've got a bigger high volume day out here, but it really didn't do anything. It ended up being an inverted hammer with 11 million shares on February 28th. So I just don't think that that's probably going to do anything. But I do like that one where it did gap up for that day, make an island reversal, and then come back down. And then basically that was a big shakeout in that company. And then it came back out, earnings announcement or something in it probably. So you'd have to go back and look in the news to find it. But yeah, you got everything pointing at about 31 bucks.
All righty.
Okay.
I appreciate it.
You bet. I'll keep this on my radar, too. Some nice stocks from our callers today. I want to thank you again for calling. And again, you can call in at 877-927-6648. And you can be like Ken or David and give me a ring. What do we have for time out here? Wanted to look at IBM and see how we're doing. The volume, as I've been doing the show here, has been extremely light. I wanted to see if we did anything else as I came back into this. 15, where is it at? 1556. Boy, just no volume, 2 billion shares. So we've done 250 million, 225 million in an hour. Just not a lot to be excited about here in this, but we will take a look at it. Anyway, IBM, let's get down to a more reasonable time frame out here. We've been talking about this being the possibility of a false breakout on International Business Machine. It had all the volume in the world. This thing could be a buy, though, and on the breakout. If this market breaks out, it may not be a bad one. It's been generating a lot of volume. It went over the October 5th high, of last year that had 2.8 million shares. You just need this thing to continually not have any volume and stay above 211.79. And what are we at? 212. So you got about 50 cents. Just don't want this market rolling over before the end of the day. Volume is light, though, so we'll talk more about this when we come back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And welcome to the end of the show. The tasty little morsel at the end. Again, you still got plenty of time to give me a call. 877-927-6648. Wanted to get to Research in Motion. We've been talking about this one for a while. It is one of those stocks that everybody thinks could come back. Interestingly enough, stock kind of opened up fairly decently this morning. It has sold off, kind of a sell the news. They have their new phone out today. Rather embarrassingly, though, some of the financial news television anchors, or not anchors, but correspondents decided to hang out in their store. And, of course, every time they went to them, the store was empty. Not good. And basically, I think this was like a store in New York. When I was watching around noontime, they had sold 7 phones. And, just the hysteria that normally comes with Apple, and just the volume that comes with Samsung. Since Samsung's, although making about half the money that per phone that Apple is selling almost twice the phones that Apple is. When you look at this, kind of interesting. But remember, super high short interest in this thing. Oh, we've got Mohammed from Glendale. How you doing, Mohammed?
Thanks for taking my call.
You bet. This must be Friday. Must be the day for phone calls.
All right. I was wondering if you could take a look at FLS and see if there's a good entry for this one.
$150. This thing is going to be pulling back most likely to this gap at $150. It popped up. Decent volume. It really hasn't come back in here and tested that gap. And $169. You'd love for this thing to come back in there and test it. $19 is not the end of the world for the stock, and if it came back with light volume, that'd be fine. Unfortunately, it's probably going to be a little bit of a while for you to wait for this thing to get back down there. Did you have something a little closer in mind?
I was thinking, because they're planning to do a stock split, I think at the end of the month. So I was wondering if that will affect.
Historically, in fact, I was going to bring that up because we're hearing about stock splits and LinkedIn and companies like this. Historically, it does not make a whole lot of difference in the price of a company in a stock split. What it normally is a change of ownership from funds who could care less because they don't need to buy the minimum 100-share lot or something. To them, that's no big deal. But if it's you buying a 100-share lot, individual, then maybe that money, it's a lot tougher to get a 100-share lot of a $169 company than a $45 company, right?
Correct.
Okay, so if you're using one of the discount brokers, so in the industry they say it relieves the friction. Normally when they split that, it's because someone's come to them and said, we want to start selling a bit of this company and get retail buyers in it. We're not going to get any at $169. So it normally doesn't change the path of the price so much as the mix of ownership between professional funds and retail investors. So in the industry, they say it takes off friction of the stock. But there's been some fairly significant studies that it doesn't really change what happens in it. It does change who owns it. I'd still think $150. That's where your risk reward's going to be. Anyway, I will be in the 4 o'clock hour on the Tom O'Brien Show. We will be talking technology all hour. So be glad to talk to you then. And we'll see you in just a few minutes.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.